There's a lot to talk about this week. Obviously, people are very focused on the arrival of President Trump today, but I think more broadly, one of the themes that has propped up is one of uncertainty, just uncertainty about the near-term outlook, both geopolitically and economically. How would you characterize the macro outlook for South Africa now?
Well, first, the uncertainty is global uncertainty is a given, whether it's in terms of the geopolitics, whether it's in terms of trade, and whether it's in terms of the economic posture that is taken. From a central banker's perspective, one finds it difficult to say where the geopolitics would go, where the trade tensions would go, and we end up with a scenario where an event where we have got to work with scenarios because we can't quite tell. It's really a difficult time to forecast. In terms of South Africa's macro, we are actually in very good space as it stands, and it's a result of three important factors. Firstly, has been the monetary policy reform that we have done. We have adopted a new and lower inflation target that is in line with peers, that is underpinned by a new monetary policy implementation framework. And secondly, had been that South Africa had been promising fiscal consolidation over the years, and investors' attitude was wait and see. We now can show that over a period of 3 years that fiscal consolidation is on course, and that we are actually going to have debt to GDP ratio peaking at the end of the current fiscal year and commencing a decline. And thirdly, and more importantly, is laying the basis for growth through structural reform in the energy sector, reform in the transport and logistics sector, reform in the visa regime, and all those three put together are putting South Africa on a very sound economic footing.
What growth are you expecting for South Africa this year?
We are expecting growth of around 1.4 for this year. Still modest, but at the very least, it is double the growth of the previous year. When you go through the kind of reforms that we had to go through, you will expect that growth will be actually pretty modest. And I think that importantly had been that we had a long period where the growth potential of South Africa has been eroded, and we have rebuilt that. And from here now, we think we've built a basis on which growth
for
will
higher
accelerate.
Potential growth. Let's talk about inflation. Obviously, you have the reworked mandate. Back in December, you described South Africa as entering into a low inflation economy. But the latest inflation print was 3.5%. It's expected to show another uptick. Would you still describe it as a low inflation economy?
Oh, yes, without a doubt. What is important is what is the anchor for inflation? We have got a new anchor, which is 3%, and that 3% has got a tolerance band of 1% on either side. We had come from an economy where we had a very wide and high inflation target range, where we had high inflation outcomes. And since 2017, we had been going on a trajectory that is lowering the inflation expectations. And the most recent readings of inflation expectations show that inflation expectations are actually converging towards our new inflation target. Okay. There is a print that is coming out later today. We expect to be a slight uptick to 3.6%. But throughout the year, the prints that we expect for each one of the month is that they will all have a 3% handle.
So what is the outlook for interest rates then?
The outlook for interest rates depend on what the outlook for inflation is. And as far as we are concerned, inflation will continue to have a 3 handle during the course of this year. We think that inflation this year would average anything around 3.5%. And we expect that by 2027, inflation will then converge towards our new 3% target. That then says that we still have room in terms of the monetary policy statement of the November meeting. Our quarterly projection model is actually forecasting to further reductions in interest rates. But again, this is just a guide that depends, that changes from meeting to meeting depending on data.
Could that be influenced by what your friends at the Fed do? There are only 2 rate cuts priced into the Fed rate curve this year. And over there, policymakers are sounding a bit more cautious about the path forward for further rate cuts.
Well, people tend to forget that the Fed is the Federal Reserve of the United States of America. So they take decisions based on the U.S. economy. The decisions that they take affect the largest economy. And for us, as a small open economy, yes, we get affected by that. But the manner in which we take decisions, we calibrate policy based on our own economic outlook, based on our own inflation outlook. And of course, our own economic outlook depends on the outlook for the global economy, which is also very much driven by the largest economy being the United States.
I've got to ask you, since we're speaking about the Fed, you are one of the first central bankers to sign that statement of solidarity in support of the Fed Chair Jerome Powell around the discussion of central bank independence. Why was it important for you to send that message out?
Well, I have been there. In South Africa, we had significant challenges to central bank independence in the year around, almost 10 years ago, 2016, 2017. We were fortunate. Our independence is enshrined in the Constitution of the Republic of South Africa. And we had to bring South Africans along with us to rally behind the importance of independent institutions. But importantly is that in the Durban meeting of G20 governors and ministers meeting, there was a ministerial declaration, and that declaration mentioned the importance of central bank independence in promoting price stability at least 3 times. The Johannesburg Summit, Leaders Summit in December, also re-emphasized the importance of central bank independence. And we felt duty-bound to remind the world that actually the G20 leaders had committed themselves to central bank independence, and that it was important that governors actually come out in support of Jerome.